Hey, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We kind of like to get into what's impacting mortgage rates on a daily basis, whether it might be something from the economic calendar, whether it's something geopolitical or headline news that may have popped up that investors are looking at spooking them or getting them excited about something. Sometimes even things that don't make sense were because perhaps the sentiment changed where good news is now bad news and vice versa for investors, that perhaps that's why you're seeing some irrational trading on them. Now, if you're not aware, mortgage rates are controlled by MBS or mortgage-backed securities, which are bonds that are traded on Wall Street. They package them on Wall Street and they sell them on Wall Street. And so this is why rates go up and down, and we will see a reset approximately every 30 days with a rollover on these. So we package them up, and that's why we have lock days approximately 30 days. Sometimes we'll have higher price as 45 days, 60 days, and then you get a little bit higher pricing, but sometimes you can get a little bit better pricing on 50-day locks. So this is why videos like this could be important, where if you're in the process of refinancing or perhaps even or buying and watching where rates are going, we can potentially tell you, give you some indication as to if it's better to lock in sooner than later or hold off a little bit and hopefully save you some money, short and long term. And hopefully you guys will agree. Uh, Anyways, a little bit about myself is I am a loan officer. I do work with the national lender, and we're here to answer any questions you might have, whether if you're looking to refinance or purchase. We'd love to earn your business. Please reach out. We'd love to talk to you guys. But regardless of that, if you guys got questions about mortgage rates or programs that are out there, we're here to assist you with that as well. So without further ado, we'll just jump right into it. We'll start off with our economic calendar here. We'll start off with the Philly Fed Index, which is basically manufacturing within the Philadelphia region. And the last report came out in October at 23.8. Forecast was supposed to be a slight uptick to 24 and had a huge spike to 39. So this is really good. We saw this earlier with, I believe it was the Chicago one, earlier that they had a huge spike as well. That was good news. So we're starting to see in November a big spike in our manufacturing across the country here. Now every Thursday we get the jobless claims here, and last week's report was initially came out 267,000, and it got revised slightly higher to 269,000. Now forecasts are supposed to show a downward trend to 260,000. However, because of the revision, it went down only 1,000 to 268,000. Obviously, if it wasn't for a revision, we would have gone upwards by 1,000. So take that for a grain of salt, right? Continued claims continue to drop, which is obviously good news right there. Leading index leading indicators index. This kind of gives us a gauge as to forecasts of what the future economy is looking like. And back in September, it was showing 0.2% initially, but however, that got revised much higher. It had a pretty big spike at 0.7%. And forecast for October was for 0.8%. It came in at 0.9%. Overall, very good economic data. So you would think that the stock market would be liking that. However, it's a little mixed today. We had they're still doing some of the corporate earnings reports, and there were some disappointments. People like Cisco came out very disappointing. I believe Dow is the only one that's in negative territory. But we are getting overall pretty uh, very good earnings reports are coming out for the most part here. Um, and then, of course, investors are starting to get a little bit jittery because we're reaching the winter, and this is getting the time where people are going to be indoors, and we have higher rates of people getting sick. And Europe, we're already starting to see higher cases of COVID cases, and of course, that will be the case here. We're starting to see a few states in the U.S. that are getting an uptick on their COVID cases, and of course, the first thought is, are we going to have more lockdowns? So we'll have to kind of wait and see what transpires, but in any case, we'll have to wait and see what happens. But meanwhile, investors are a little bit, it's making them a little bit jittery about what's happening. So let's take a look here at mortgage-backed securities and what's going on with mortgage rates here. We're currently up 5 basis points. As you see here, we did have a couple of swings here, both directions. But right now we're up 5 basis points. For the most part, we're going to be unchanged from the levels we were at yesterday. I believe we closed up 14 basis points, which was good. We did have a price improvement from the previous day, from Tuesday's pricing, and then we're up about 5 basis points. So I think you'll uh, I mean, basically mortgage rates, if you look at just the rates itself, it's going to be unchanged. Pricing might be a slightly better on there, so maybe half a point could be, that no points, maybe get slightly back, a little bit back for lender credit, but it's not going to be like a huge difference. It's not going to really impact the rate itself. The pricing might be slightly better though. All right, so here's a look at what on a daily basis what it looked like. So after the announcements of the morning, it was initially going downwards, and then once we had those rollouts of the good economic data, we saw the bond market go upwards, and we've been kind of going somewhat, for the most part, sideways. But as you see, we did have a few movements, drops, and then ebbs and flows here. But for the most part, going sideways here. And then let's go ahead and oops, sorry about that. Let's go ahead and take a look at the yields to see what yields are doing right now. And yields are down. So we're touching out the 25-day moving average. We're at just under 5.59 now, as we were way up here at 1.64 at one point. Now we're down below 1.6. So right now we're sitting at right about just under 1.59 and trying to break below this 25-day moving average again. Now, the national average for mortgage rates on the conforming limit, it does have points built into it, so be prepared. We do have a 30-year at 3.25%, and we got the 15-year at 2.63%. So these are kind of the averages that we're seeing out there, and again, they do have some points built in, so keep that in mind when you're asking for rate quotes on there. And of course, there's a lot of different variables that go into a rate. So, whether it's the equity of the property, how much equity or down payment is in the property, the type of property, occupancy on the property, a person's FICO score, the programs they're using are vary on there as well. So, FHA and convention can't always go on there, or the governments or jumbo. They do have slightly different pricings. And even with, if you're in a high balance conforming and a regular conforming, there's some difference in pricing as well. So just be prepared if you ever are in the process of shopping and looking for rates, getting quotes, why it might be different from some of the others that you might be hearing. So regardless, we'll call this to the end. We basically mentioned mortgage rates remain unchanged. If you guys got questions about anything, please feel free to reach out. If you like these videos, please help us out by smashing that like button and follow. We're here to help you guys out, and we'll look forward to seeing you guys in tomorrow's video. Have a great rest of your day. Thanks for watching. Take care. Bye-bye.